Yes, so people, welcome to the channel. This is my first video. I've been trading for the past 18 months or so. And for the longest time, I had the problem that, I'd be spending the whole day in front of the chart, waiting for a particular setup to form. And essentially, I was spending way too many hours at my desk. And I didn't like that because I want to have a life. And so found ICT Silver Bullet. Um, It didn't work for me straight away, but I made some adaptations to it, and now it is literally my go-to setup every single day. You only need to sit in front of the charts for 3 hours max. So you've got your London session, New York AM session, New York PM session, and then an hour per session, literally. Um, and yeah, it's very lucrative, high strike rate, very consistent, very reliable. If you nail this setup, you're good to go. Back test it, forward test it, and you are literally good to go. You can get funded and you can make a living off this. So I'll run you through the setup or my version of it. So this is the Ebro Trades version. And let me know if you lot have any questions in the comments, like, subscribe, all that good stuff. So at the top, risk management, risking 1 to 2% per trade. That's pretty standard. Usually I'd be risking 1%, but if I'm really confident, I risk 2. For funding challenges, I'll start off risking 2. Always. First trade, always 2%. You want to ensure you've got at least 10 handles to your next liquidity for indices, 15 pips to your next liquidity for forex. And what that means is if I'm entering the trade at this point over here, so at this point over here, then I want to ensure, and I'm going short. Say I'm going short from this point over here. I want to ensure that this distance, so the distance to my take profit level, is at least 15 pips. In this case, it's 75. So it's a no-brainer, this trade. Let me change the cursor. And for indices, 10 handles. Indicators, we're not using any indicators for this, except for the fact that we're using vertical lines to mark out our time window and the window in which we'll be looking for liquidity. So this window over here is the window in which we're looking for liquidity. And by that, I mean marking out our sell side and buy side. And this is the window in which we enter our trades. Keep in mind, we don't have to exit our trade or close our trade within this window. We only have to enter the trade within this window, just to make things clear. Points of interest, we're looking for liquidity sweeps of either the buy side or the sell side, and that essentially means that we're waiting for price action to surpass a buy side level or a sell side level, and that will instigate, or that will be the start of our setup. So if we sweep our buy side, then we'll be looking for sells to ultimately sweep our sell side as well. If price hits our sell side first, then we'll be looking for buyers to eventually sweep our buy side. Fair value gaps, we'll get to that later, but that is essentially an area of price that has not been occupied within the displacement leg. And I'll show you that in a sec. Relevant time, so you've got obviously 3 potential sort of options every single day. You've got your London session, the New York session, and the New York afternoon session. And this is all London time. So to change it to your time, you literally just go here on TradingView and you change to whichever time zone you are. I know a lot of my friends are on sort of trade on the New York time, because that's what ICT teaches, but I live in London, so London's more convenient for me. Um, Onto the trading plan. So essentially, usually I'd open the chart around 10 minutes before session open, so somewhere over here. I'd mark out my sell side. So those are the extremities in the sell side. So that's my liquidity. So sell side liquidity, sell side liquidity, and then buy side extremity over here. So that's my buy side liquidity, and that essentially means that there are a lot of buy orders over here, a lot of money over here, above, and a lot of money below these levels over here. Right now, we've marked those out. We wait for us for our price action to trade within our time interval, and our trade will look something like this. So price action does this. Switch to my mouse. So price action does something like this. So it's ranging, it's moving around, but it's trending up. And bam, it sweeps our buy side. So the price action has just swept our buy side liquidity. And what that means is we are now waiting for a displacement causing a market structure shift. And a market structure shift is essentially a change in nature from bullish to bearish or from bearish to bullish. And I can show that to you here using the paint tool. So, bullish market structure is just higher highs and higher lows, trending upwards, right? And bearish market structure is lower highs and lower lows. And essentially what we are looking for to start this setup is for price action to change its structure from one to the other. And that looks something like this. So in this case, we've just swept buy side liquidity. We're looking for a lower high to form, right? And there's our lower high just there. Oh, there's our lower high here. Oh, yeah. So you can see that we've got higher highs forming in this direction. And now, well, this is supposed to be an arrow, but I'm bad at drawing. And now we have a lower high that's just formed. And so we've changed our market structure. We've broken this level over here, right? We now look for a fair value gap to enter off of so that we could take a short position. And our fair value gap in this case would literally just be this region over here. So that literally would be our fair value gap. And then we'd literally take a short position over here. Need to turn this off because it is annoying me. And look for 2-to-1 CP. So stop loss just above our displacement leg, and our take profit at 2-to-1. So this is what the setup looks like. It's a little bit messy, but we'll move to an example now, and everything will make sense. Just to summarize, 1 minute time frame. We're marking out our liquidity 10 to 30 minutes before our time window. We wait for liquidity to be taken on either side, so either on the buy side or on the sell side. We've seen that in this case, the buy side liquidity got taken. Then we wait for a market structure shift, which signifies that we will now sweep the sell side liquidity. Our entry is literally off of the fair value gap in the displacement leg that causes the market structure shift. In this case, this over here, well, let me use the paint tool to make it clearer for you. This here is the displacement leg, right? Entry in line with our fair value gap, and price action, if everything goes to plan, which sometimes it doesn't, by the way, but 80% of the time it does, should do something like this. And smash our TP, right? Let's do an example. I don't want to keep you lot here for too long, so let's do an example, and it should make sense. Yes, the boys. So this is our example. This was this past July. There was news. Usually I look at the news and see whether or not it's relevant. In this case, it was job openings, ISM services. Nothing I think is too relevant, so I traded anyway. It turned out to be a textbook setup, so it was the right decision. I'll open the charts 10 minutes before my window, so around 2:50. I'll open the chart. I'll take a look. Obviously, I'm trading the New York AM, so that's 3 to 4 p.m. UK time. Again, you could go here and change to New York time for your time zone, but I'm in London, so I trade BST or UTC +1. So open up the chart. Buy side liquidity here, sell side liquidity here, sell side liquidity here. Again, if you have questions about sort of which levels to use as liquidity, then write them in the comments, and I can do a whole video about that because that's a big topic in itself. And yeah, marked out my liquidity levels. We're now waiting for, you see here, go to our trading plan. So I'm actually on the 1 minute, but you should be doing this on the 5 minute. Well, it doesn't really make a difference, but 1 minute or 5 minute. But I like to stick to 1 minute. So let's put or 1 minute. right? I stay on 1 minute because my entries are on the 1 minute. So I've marked out my liquidity 10 minutes to 30 minutes before my time window. And that's this area here. So this is my interval in which I mark out liquidity. Switch to 1 minute. We're on the 1 minute. Wait for liquidity to be taken on either side. So let's look at what the price action does. And there we go. We've got a candle that has closed just above our buy side liquidity over here. And so we now go on to the next. We could actually change this to that. Yeah, so this is done, this is done, this is done. Liquidity has been taken. We now wait for a displacement causing a market structure shift. And that means we need to go from bullish to bearish market structure. That would constitute a market structure shift. You can see we've got, let's switch to the brush. You can see we've got higher high, higher low, higher high, higher low, higher high, higher low. And I'll drag that to show you what I've just drawn. I know I'm not the best at drawing, but you see what I mean? So it's bullish market structure. So what we're looking for now is for us to form a lower high and a lower low. And with that, our market structure is broken. Does that make sense? I hope that makes sense. So we are looking for a lower high is essentially the gist of it. And let's see what happens. So bearish candle, let's see what happens. Bam. Got a big, obviously there's news, so the candle is more exaggerated than it would usually be. But nonetheless, we've broken structure. Let's see if a low is formed. Yep, so this is our low. We've now made a lower low. We've broken structure here. So I can show you, look. So we have horizontal rate. So we've broken structure here. We've broken structure here. And we've broken structure here, right? So huge break of structure right there. And we can see that a fair value gap is also formed, and I will draw that for you now. So here is our fair value gap. And our fair value gap has to be all body, no wick, right? So we exclude the wicks. You can see that I've only included the body. And our entry will be off of the fair value gap. Now, obviously, if you want a sniper entry, so a super perfect entry, you could use your Fibonacci retracement. You could use a Gambox. But for me, I like to keep it simple. I'll enter off the bottom of the fair value gap. I'll go for, 1 to 2 risk reward. My stop loss just above the displacement leg. Target 1 to 2 RR. So just like that. And I'd set multiple take profits. So I might set my first TP at this liquidity level over here for 1 to 1, and then let it run sort of to see if we can secure more profits. So let's see what happens. So we're tapped into the trade. See what the price action does. Is it going to hit our TP? Yes, it does. And with that, we have smashed TP, and we leave the trade 1 to 2 RR. Textbook setup. This is my adaptation of the silver bullet. Again, I trade this across a few pairs. You see I've got the Euro USD, the SPX, GBP. Sometimes I look at the Nasdaq and GJ, but I find that Euro USD is sort of my favorite setup personally. And yeah, I hope you've learned something. So take what I've given you here. Let's check the rest of these boxes. Take what you've learned here. Take what I've given you, and backtest it. That's my biggest piece of advice. Backtest it, and that way you'll grow comfortable. Backtest it on at least 3 months of data. Log the outcome of each trade in your backtesting using a journal. If you want help on journaling, sort of how to keep a trading journal, how to back all that sort of thing, then write it in the comments, and I will genuinely make a video about it. I'm going to read every single comment. This is my first ever video, so maybe it's a little bit scrappy. Apologies, but I will improve. I plan on staying consistent with my trading. I've been doing this for around 18 months, which isn't too long, but I managed to become profitable pretty quickly because I broke it down to a science and I was really methodical and rigorous with my back testing and forward testing. Um, and if you want to learn how I did that, again, write that in the comments. I'll make that a video. Please like, subscribe. Any questions you have, I will read every single comment without fail. And I appreciate all of you. I hope you've enjoyed this video. I hope you've learned something. Um, and yeah, let me know what you like, what you don't like. Um, and I'll see you boys in the next video and girls. Stay safe, take care, love, peace, all that.